Now, one of the key ways that we have seen people trying to make money lately is through the stock exchange. Now, remember when Safaricom was listed, when KenGen was listed, a lot of people flocked to buy that particular stock in the hope of getting rich. So how can you get rich on the stock market? To discuss that, we have Mbithe Mwema from Ideologists to guide us through investing in the stock market. Tell us, first things first, if I have never invested in the stock market, where do I start?
Thank you, Terian, for having me on your show. I think if you're looking at the stock market, you must be able to try and understand what the companies are all about. You've just mentioned KenGen and Safaricom IPOs, two very interesting IPOs. One, people made a lot of money, but the second one, not as much. People actually lost money. And I think it was just a basic thing of supply and demand at the time. KenGen, the shares available are not as many as compared to Safaricom, which could have been a bit of a flop at that point in time. So I think for starters, it's important to try and understand the supply and demand dynamics at the point of entry. So,
but how do I know which company to, to invest in? I mean, there's like 54 stocks listed on the stock exchange. How do I know, should I put my money in Safaricom? Should I put my money in KCB, Equity Bank? How does somebody decide where to put their money?
I think looking at where to invest, it's two-pronged. The first we've just mentioned is supply and demand. So if you're at an IPO stage, you want to try and understand how many shares are available. If there are too many, then maybe you want to wait it out. Then when the supply gets out, then you can come in. That's the case of Safaricom. I think also for any other stock, there are key movers. Safaricom is always a key mover. Equity Bank is always a key mover. And we term this as stocks that actually have a lot of liquidity. So if you're somebody who's trying to get in on a short-term basis, it'll be easier for you to get in and get out. But the second and the most important thing about investing is looking at the fundamentals. And this means trying to understand, what do these companies actually do? And do they actually have a competitive advantage over their competitors in the niches that they're operating in? And more importantly, are they actually companies that are investing in change? And I think we've just heard from some of the interviews that you've shown today that it's important to get into companies that are not only going to be here today, but will be there for years to come. Safaricom has its roots in M-Pesa. It has been able to open up the economy, create a cashless economy, so to speak. We have Equity Bank that has also been investing in people at the bottom of the pyramid. So you're actually bringing people out of the informal sectors and into the formal sectors. And I think those are some of the key interesting things to look out for when you're looking at the fundamentals.
For instance, we've talked about, say, Kenya Airways, which has now decided to get into the low-cost carrier market, which is new for Kenya Airways, so to speak. How would somebody read into that? Should I now think of buying Kenya Airways because of the perception that it's going to make a lot more money locally?
Maybe another point to add on the fundamentals, it would be good to try and look at the websites. All of these companies that are listed have actually been very proactive in putting the information out there. So looking at Kenya Airways, it would be great to just get the financial reports and understand what they're doing. Because in as much as they're getting into a new industry, what makes Kenya Airways lose money is two things. Taxes in terms of the places that they fly to, because they have to pay taxes to get into the different regions. And then the other thing is fuel, something that they don't actually have control over. So in as much as they're pushing new business, they don't necessarily have control over one key component of their operations, which means they could not probably be making as much profits as you anticipate. So try and understand, what are the operations, what does the company actually have control over, and what are the key components, so that even though they're increasing their revenue in terms of new routes, are they actually having control over the key cost, and if this new revenue that is coming in is able to offset the cost that they have to incur to make this business work.
And what must I absolutely not do, otherwise I will lose on the stock market?
Don't invest with your eyes shut. Try to get as much knowledge as you can. Try and get as much wisdom as you can. There are people who've been there, who've done it before. But I think it's just basic. You don't literally go buy a shoe before trying it on. You try and understand what goes on where you're getting into. So it's important to get knowledge and wisdom and invest for change.
Okay. Thank you so very much. There's some great tips there on how we can make some money from the stock market. Let's